Hello everyone, welcome to Study IQ. So in this session we are going to deal with profit and loss. Okay, only one session. In percentage, if you see, we have spent around 3 sessions for the concept itself, because percentage is very important, not only from quant point of view but also very important from DI point of view. Okay, that's why I spent that much amount of time, and the questions we will obviously cover in the later session. Okay, I have in fact discussed only the concepts. So in the first sessions, what I am actually planning to do is we'll build the concepts. Okay, now in this session we will build the concept for profit and loss. And why I'm taking profit and loss after percentage is basically because a lot of questions are basically the application of percentage only. Okay, so in profit and loss also you will see a lot of application from percentage. Now percentage otherwise is important, most importantly from the point of view of DI, that's your separate session. Okay, separate section. Now in profit and loss I can complete this session in hardly 20-22 minutes. Okay, so after that later we will solve the question. So here also I am not going to discuss the question, rather I'll discuss the concepts and whatever things you are supposed to know here, and also we will discuss certain patterns of questions, not exactly the questions. Okay, then we will take up some questions later. So we will take up level 1 difficulty, level 2 difficulty, level 3 difficulty, which is depending on certain exams. Okay, now if you look at from CAT point of view, this topic is not that relevant nowadays. Okay, earlier there were a lot of relevance for this particular topic and a lot of weightages was given to profit and loss. There were questions from profit and loss, but these days you can't see much questions from profit and loss. So the relevance of this topic is actually came down from CAT point of view. But obviously some other management exams you need to prepare for this topic. But again, CAT being very unpredictable, they can ask you questions from this topic. So it's always better to master the concepts in profit and loss. And there is nothing more to discuss apart from percentage. Only 2-3 points that I'll be covering in this session. Okay, but again I tell you, if you are going to take some other exams, if you are an aspirant of SSC or bank or something else, and if you are watching this video, you must prepare for it, because this topic is going to be very important for these exams. Okay, so let me start off with the concepts of profit and loss. Now here 2-3 words which you need to know is, what is cost price? See, cost price is actually the expenditure on producing a particular item. Okay, so you made an item, so the expenditure that was incurred on the production of that particular item is what? Cost price. Okay, now then you have something called a selling price. So you produced an item and then you will sell that item on a particular rate. Okay, so that rate include some profit also, because you made an item. Okay, so the production cost is the cost price that we have seen, plus you will get certain amount, right? This gain, and this is what the profit. So basically selling price is cost price plus profit. Okay, now in certain cases you may sell the item for lesser price also. In that case it is loss. Okay, so it can be plus or minus, gain or loss. So that's how I can write selling price. No, it is not necessary that you will always get profit, right? See, you produced too much of items but the demand is less, so you may need to sell at very lesser price, so you may incur loss also. So let me put it in this way: if the selling price is greater than the cost price, you have a profit. Okay, if the selling price is greater than the cost price, you have a profit. If the selling price is less than the cost price, you incur a loss. So I hope this is clear for you and everybody know this, right? Now let me move on to the concepts. Okay, so if I ask you what is profit, profit is actually selling price minus cost price. So profit is selling price minus cost price. Now in case of profit, what is selling price? So from here itself we can understand that is actually cost price plus the profit. Okay, so if cost price and profit is given, you will find selling price like this. Now if selling price and profit is given, how to find the cost price? Cost price is equal to selling price minus profit. So all these are basic things. Now if you need to calculate a profit percentage, okay, so how will you calculate it? See, percentage profit is equal to profit divided by cost price, okay, into 100. See, if you remember in the percentage discussion, we have discussed how to find the percentage, right? See, what we were doing there, we were actually doing final value minus initial value divided by initial value into 100. Okay, now here instead of final value and initial value, it is selling price minus cost price. So selling price is the final value, cost price is the initial value. So here also cost price into 100. So exactly the same thing only, but there is a change in the way you represent thing, right? So here selling price minus cost price is what your profit. Okay, so that's why profit divided by cost price into 100. Now let's suppose in the same method that we calculated percentage, the shortcut method that we have discussed, see 5 to 10. Okay, how will you calculate the percentage? The factor of multiplication is 2. So you write the factor of multiplication minus means 10 by 5. Okay, so 2, then 2 minus 1, you will get 1, then add 2 zeros. That's how you'll calculate profit percentage also. Okay, so an item costs 10 rupees and you are selling it at 30 rupees. What is the profit percentage? See, the factor of multiplication is 3. 3 minus 1 is 2. Add 2 zeros, 200. An item costs 10 rupee. You are selling at 13 rupee. What is the factor of multiplication? 1.3. Minus 1, you'll get 0.3. When you add 2 zeros, it becomes 30%. Okay, so that's how you can calculate the profit, or when it comes to loss, percentages faster. The same method that we have learned in the session on percentage. So in other way, how can you understand the selling price? Selling price is equal to cost price plus profit, right? So profit means it's actually percentage on the cost price. So it's actually certain percentage on cost price. So in some cases you will be getting this percentage. So let's suppose 20% on cost price. So cost price is 100 rupee and I am getting 20% profit. That means what? See, selling price will be cost price, which is 100 plus 20% of 100, that means 120. Okay, so selling price is 120. Now in some of the shops, if you go, you will see discounts, right? See, in that case you need to subtract. Okay, see, we'll discuss those concepts later, but still, see, the marked price, okay, there it is not selling price. The marked price is 100 rupee. Okay, but there is a discount of 20%. Okay, so what is the selling price? Here the selling price means marked price minus a percentage on marked price, that is a discount. So marked price is 100, percentage discount is 20. So 20% of 100 is 20. So if it is 100 minus 20, which is equal to 80. So we'll come to this later, but now let's understand selling price is equal to cost price plus percentage gain on cost price. So if I give you a question like this, a person purchase an item for 150 rupees. Okay, so person purchase for 150 rupees and he is selling it at 20% profit. So he is selling it at 20% profit. So what is the selling price? So 150 plus 20% of 150. So how will you calculate 20% of 150? Either you will write like this, 150 into 20 by 100, or you know 10% of 150 is 15, 20% of 150 will be 30. Okay, so 150 plus 30, which is equal to 180. So that's the selling price when you are selling at a profit. Now again the same question, you bought an item for 150 rupees, you are selling it for 20% loss. Then what is the selling price? Here it is similar to the discount concept that we have learned. So 150 minus 20% on 150, that is again 30. So 150 minus 30, which is equal to 120. So if it is profit 180, if it is loss 120 is the selling price. Now if you extend this concept, see, you bought two items and each cost 150. Okay, same here. So instead of one item, you bought two items. So what is your actual cost price? So your cost price is actually 300. But this 300, you got two items. Now the question can be like this. One you sold at 20% profit and one you sold at 20% loss. So what is the effective profit or loss percentage. Okay, so when one item you are selling, let's suppose A, you are selling at 20% profit, we know you will get 180, right? We know you will get 180. Next item B, if you are selling at 20% loss, means you will get 120, right? 120. Now next time onwards, you don't want to do this calculation. It's a pattern. So learn it in that way. See, the cost price is the same for two items, and one you are selling at a profit and one you are selling at a loss, but the percentage remain the same. Then what is the effective profit or loss percentage? If you ask me, if you add this is what he is getting finally. This is 300. So what is the effective cost price? 300, because two items. What is the effective selling price? That is also 300, because two items. So whether he is having a profit or loss? No. So in this case, no profit, no loss. What is the question? Two items bought at the same price, selling one at a particular percentage profit and the other at same percentage loss. Effectively, there is no profit, no loss. Now the alternate question can be, see, instead of cost price same here, the selling price of two items same. So selling price of two items are same. Okay, now in this case, but what he is doing is, one he is selling at 20% profit and the other he is selling at 20% loss. So what is the effective profit or loss percentage? That's the question. So basically, see, if you look at this, selling price is same, means if you assume 100 was the selling price, okay, two items, so each cost 100 rupees, okay, and each is selling at 100 rupee, one at a profit and one at a loss. That means one he might have bought at a price which is greater than 100 and the other he might have bought at a price which is less than 100. Okay, now see, so here there is an actual price of X. Here you are selling at profit, and X plus 20% of X, okay, divided by, see, what is X? X is actually the cost price. 20% of X means that's the profit, divided by X, okay. So that is the selling price, which is equal to 100. So you can find X, okay. Now similarly, here another cost price, that is Y, minus 20% on Y divided by Y, okay, is equal to again 100. So you can find Y, and after finding X and Y, you can find the effective cost price, okay. So you will get the effective cost price. Now here your selling price is given 100 rupees. So effectively 200 rupees is the selling price. Now if you calculate this, you will get this as definitely greater than 200. Now you don't want to calculate the exact value here. I give you the pattern. So here it is 20% and 20%. In this case, you understood that this is always greater than 200. That means there is always a loss. There is always a loss in this case. And what is loss percentage? Just multiply this two. You'll get 400, so 4%. Always loss and 4% loss. If it is 30-30, 9% loss. If it is 60-60, then depends, like 36% loss. Like that it will go. I hope this is clear for all of you. Now I told you this is greater than 200, so this will be around 208. Okay, now you can actually understand from here itself. So what is the loss? Here in this case, 8. Now 8 is what percentage of 200? Okay, so that is 4% of 200, but you don't want to do all these things. It's not expected, okay. So you just need to understand this as a pattern where the selling price of two items same, one at a profit and one at a loss, and if it will always end in loss, and the loss percentage you take, you just multiply this. So what is selling price? Selling price is actually, you can write in this way, 1 plus percentage gain divided by 100 into cost price, okay. Then what is cost price? 100 into selling price divided by 100 into gain percentage, okay. Now all these formulas are not required, you just need the logic. So what is loss? Loss is equal to cost price minus selling price. What is profit? Selling price minus cost price. So we have seen this. Now in case of loss, what is the selling price? CP minus loss, okay. Cost price minus loss is the selling price. So then what is cost price? That is selling price plus loss, Okay, now what is loss percentage? Loss percentage is equally, loss percentage means loss on every 100 rupee. Okay, the denominator should be 100. So here loss by the cost price into 100. Profit percentage, we have seen profit divided by cost price into 100. So this too is what you need to remember, and that is common sense. If you remember the percentage chapter, this is nothing but the absolute change divided by initial value. Profit also the absolute change divided by the initial value. Now there are few concepts which you need to know. There is something called direct cost or variable cost. See, this is a cost which is associated with the direct selling of a goods or service. Okay, basically these are raw material cost, such kind of cost. Okay, so see, for one pen cost, let's suppose 15 rupees. Okay, one pen cost 15 rupees. In that, if I say variable cost is 5 rupee, okay, the cost incurred in making of the pen, the raw material cost, etc. So if you are selling 100 such pen, 5 into 100, that is 500 rupees the variable cost. Okay, if you sell 200 such pens, and 1000 will be the cost. It varies, depends on the number of pens, right? See, if 500 pen is there, 500 into 5. For every pen, this is 5. So it is direct cost or variable cost. Okay. Now other type of cost you can see is just, this is just for understanding, indirect cost or overhead cost, or these are fixed cost like the rent, okay, and the salary of the employees, okay, etc. Now how will you calculate percentage? These two costs are always need to be taken care if you need to calculate profit or loss. See, let's suppose you have a pen, okay, this is costing 15 rupees. In that there is a variable cost or a direct cost of 5 rupee. So you can calculate now based on 10 rupee only, because this 5 rupees is over, because that may be the raw material, etc. Now out of this 10 rupee there are certain fixed cost also, like the rent, okay, and the salary, etc. Okay, so now let's suppose you are producing 1000 pen. Okay, let's suppose you are producing 1000 pen. So 10 rupees into 1000 is what you have now, right? So that is nothing but 10,000. In that you need to pay rent, that is fixed, rent as 1000. Okay, so what you have left out is 9,000. 9,000 is left out. Now you need to pay salary. Let's suppose you are paying 3,000 as salary. Now what is left out? 6,000. So this 6,000 is what you can calculate as your profit. Okay, now we'll come to discuss about this in detail. See, again, sometimes you will see some semi-variable cost. Semi-variable cost. See, there are certain costs which behave like a fixed cost, but after certain point of time, it has to be increased when the sales are increasing. It's like if the sales are increased and reached up to a particular level, and you need to have some more infrastructure, some more employees, etc. So that situation, we take it as semi-variable cost. And this happens due to increase in sales, and because of that there is an increase in workspace required. Okay, so this rent of the office space become a semi-variable cost. It happens only when the sale of a particular item reach a particular level. Okay, so 3 points that we have learned here is variable cost or direct cost, then fixed cost and indirect cost, and then semi-variable cost. Okay, now what do you mean by break even, or before that the concept of margin or contribution per unit. So what is this concept of margin? See, margin is basically your selling price minus the direct price, or the selling price minus variable cost. That's what your margin or the contribution of that particular item. Now this margin is what you are going to use for the recovery of the fixed cost like the rent, salaries, etc. So first you will calculate the margin, and based on that you will recover the cost like this fixed cost, the rent, salary, etc. Okay, so all these points are. Now let's look at break even. Now break even means you are selling some items and you reach at a point where there is no profit and no loss. Now after the break even, whatever you are selling is your profit. Now if you want to understand through a better example, let's suppose you have a shop. Okay, you have a shop and you need to pay like 2,000 as the rent, and let's suppose salary is like 5,000. Okay, so 5,000 salary. Okay, so These are what we call as the fixed cost. Okay, so these are fixed cost. Now in this shop you are producing something, some item you are producing, sweets or something. Okay, so the selling price of that item is 10 rupees. The selling price is 10 rupees and the cost incurred on that means the variable cost is actually 5 rupees. Okay, so this is selling price and this is variable cost. So what is the margin on each item? The margin on each item is 10 minus the variable cost, that is 5 rupees. Margin on each item is 5 rupees. Now you sold 500, or let's suppose 10,000. Okay, so you sold 10,000 units of this item or the sweet. Okay, so you sold 10,000 units. So what is the margin? What is the margin is, if you ask me, that is 50,000. Okay, so 50,000 is the margin that you have now. Okay, now what you need to do is, what is the profit? 50,000 minus this fixed cost, that is 7,000, that is 43,000 is the profit. Now to know what is the break-even point and all, what you need to do is, this 5 rupees is the margin on each item, and what is the fixed cost? That is 7,000, and from the margin or the contribution of that item you need to recover this. Okay, so the recovery point is what we call as the break-even point. So 7,000. Now how many items you need to sell to recover the 7,000? So 7,000, that is a fixed cost, divided by the number, that is the margin, that is 5. So what you get? You get 1400, right? So 1400 item you need to sell so that you will recover the fixed cost. That means whatever you are going to sell after 1400 is your profit. Now if you are selling below 1400, that's your loss. Now how much loss, if you ask me, how much item you sold? Okay, so 1400 minus how much item you sold. Okay, let's suppose 600. So 800 is the difference. Now you can multiply this 800 with 5. So what you get? 4,000. So 4,000 is your loss. Now let's suppose 1400 is what you need to sell to get the break even. Now let's suppose you sold 2,000. So what is the profit? 2,000 minus 1400, that means 600, into 5, that means 3,000 is your profit. So I hope this concept is clear for all of you. Okay, so basically I just need to discuss about these three concepts, that is the one variable cost or the direct cost, then indirect cost or the fixed cost, and the semi-variable cost, then margin and break even. These are the words that you need to remember or you need to know when it comes to profit and loss questions. So in this case, if you ask me what is profit, actual sales minus break even sales, okay, into contribution per unit, I am writing it as margin. So in the example that I have shown you is 2000 was the actual sale, and break even sale I told you that was 1400, into the margin I told you that is 5. Second case, in loss, here it is break even sale minus actual sale into contribution, that is margin. So break even sale was 1400 minus I told you there was only 600 sale, so into contribution, that is 5. So here you got 3000 as profit, here you got 4000 as loss. So I hope this is clear for all of you. Now another typical question that you can get is, you can calculate profit on the basis of equating amount spent, okay, amount spent and amount earned. So the question can be like this: a fruit vendor can recover the cost of 25 mangoes by selling 20 mangoes. Okay, so a fruit vendor, he bought 25 mangoes, that's the idea, and that cost he can recover by selling 20 mangoes. So obviously, you know, 5 mangoes are left out, and that's what is profit. Okay, so here the rate or nothing is given. If the rate is given, we can calculate accordingly, but rate is not given. What is given is, by selling 20 mangoes itself, he was able to recover the cost. Now what is the profit percentage? How to calculate the profit percentage? You can equate like this. See, the percentage profit, always remember this, you can get this kind of questions. Percentage profit, goods left divided by goods sold into 100. So how many goods left here? 5. and how much is salt? 20, right? So into 100. So you can understand that he is getting a 25% profit here. So if you get questions like this, see, I can change mango to banana 25 to 30. That's a change which I can make, right? See, instead of mango, I'll write a vegetable vendor can recover, okay, the cost of 30 apples, okay, by selling 25 apples. Then what is his profit? Now, there is another concept of markup. Markup. See, what is markup if you ask me? Any trader, if he is selling a particular item, he will add some price to it, okay? See, there is a cost price plus he will add a percentage of cost price to that, and that's what is selling price, right? So, mark up, that's what you mean by markup, which is equal to mark price. Or that may not be the selling price. He may give some discount also, okay? So, we cannot conclude that this is a selling price if there is an offer. Sometimes this can be the selling price, sometimes there will be a discount. So this is a case, cost price, let's suppose 100. Now he is adding 30% on cost price. So that is 30, which is equal to 130. That's a mark price. So this is a cost price, this is a markup. 130 is the mark price. Now let's suppose he is offering a discount of 10%. So what is 10% of 130? That is 13. So what is the final selling price? That is 117. So what is his profit in this case? 100 to 117, that is 17%. So if you see how many percentages are involved here, this 30% as markup, then 10% as discount, and effectively he is getting 17% profit. So this is what the concept of markup. So cost price plus markup is equal to marked price. Now what is selling price? Selling price is equal to marked price minus percentage discount. So these are the points that you need to remember.